Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a common question we receive especially after the April 15th due date passes, and that's whether U.S. expats have to also file FBAR and FATCA. Typically the answer is going to be yes, but there's some exceptions and some exclusions and limitations, so let's go through it. First, U.S. expat, for purposes of FBAR and FATCA, the idea is that it's a U.S. person living overseas, not someone who's formerly expatriated, renounced citizenship, or terminated their green card status. U.S. citizens, lawful permanent residents, taxpayers who meet the substantial presence test. So conceptually, it's pretty well known that the U.S. is one of the only countries that taxes individuals on their worldwide income. So you live overseas, all of your income is generated overseas, all foreign sourced. You still have to file a U.S. tax return and report your worldwide income. Now, you may have foreign tax credits in the foreign earned income exclusion, but you still have to report your worldwide income. But you also have to report your global assets, accounts, investments, foreign trusts, foreign entities, foreign partnership, life insurance policies, pensions, etc., etc. There's lots of different international information reporting forms that taxpayers have to file, may have to file depending on the amount of the value of their assets. The two main forms are the FBAR and the Form 8938, and they're similar conceptually. You're reporting the maximum value, but the forms are a little different. 8938 is an IRS form. It's filed with your tax return. The FBAR is a FinCEN form. It's filed regardless of whether you have to file a tax return or not if you meet the threshold. So the question is, can expats avoid filing these two forms? So let's start with the FBAR. So the IRS takes the position that you have to file the FBAR whether you live in the United States or you live abroad. Publication 5569 from the IRS, it's dated back 2023, I believe, gives a good summary of what you have to do. Something to keep in mind, by the way, is whether you live in the U.S. or you live overseas, the FBAR threshold is the same. It's more than $10,000 in annual aggregate total, not per account, just the total value of accounts. So the IRS takes the position that you still have to file it. So you're a U.S. citizen, you live overseas, you're a permanent resident, you live overseas, you meet the substantial presence test, you live overseas, you still have to file it. Now, taxpayers who live in a treaty country can make an election sometimes to be treated as a non-resident alien for tax purposes. So that means instead of having to report their worldwide income, they only have to report their U.S. sourced income, which is great. It doesn't apply to FBAR technically, but there was a case last year, the year before. It's called ROS Day. I hope I'm pronouncing that correctly. And in that case, a taxpayer was penalized for non-willful FBAR violations. His argument was that he lived in a treaty country. He had made a treaty election. It was Mexico. And then he challenged the IRS, and he actually won. So there is that case out there where the position is that the taxpayer lives in a treaty country and made a treaty election, they may qualify to not have to file the FBAR. Now, the IRS does take the position that all the other forms are required as well, but it's something to keep in mind. The other question is whether expats avoid filing Form 8938. 8938 is a little bit different, and there's more ways to kind of get out of filing the 8938. First thing to keep in mind is that there's a higher threshold if you're a foreign resident. If you live in the United States, depending if you're single, married, or married filing separate, the threshold is going to vary between, I think, $50,000 and $150,000. Now, if you live overseas, the threshold varies from $200,000 to $600,000. So first thing is that you may have had to file the form if you were a U.S. resident, but if you're a foreign resident, you may not meet that threshold. Another thing to keep in mind is that unlike the FBAR, the 8938 is only required when your tax return is required. So like an FBAR 3520, 8621, you have to file these forms even if you live overseas, even if you don't have to file a tax return, these forms are still required. The 8938 is only required if your tax return has to be filed. So if you don't have to file a tax return, if you're living overseas on retirement, congratulations, and you don't have any income, you're just living off savings, you may not even have to file the return. And then finally, the treaty election works a little bit different. With a treaty election for 8938, you wouldn't have to file the Form 1040 typically. You only have to file the Form 1040-NR. So if you only have to file the Form 1040-NR, then you have a much stronger argument that you don't have to file the Form 8938 along with the Form 1040-NR even if you would have met the threshold for having to file if you were filing the 1040 instead. If you're out of compliance, you haven't been doing this in years past, don't worry too much. There's various programs you can use to get into compliance. If you're willful, you use the voluntary disclosure program. If you're non-willful, there's lots of other programs available, especially for expats. There's something called the streamlined foreign offshore procedures, in which taxpayers can typically skate by without having to pay any penalties. And depending if you have foreign tax credits or qualify for the foreign earned income exclusion, you may not have any tax liability either. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.